Bitcoin has seen a large correction from the 28 to 28.4 major high time frame resistance. Will this correction develop into a downtrend, or is it nothing more than a short pullback before a continuation upwards? Let's go ahead and jump into the video. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. Bitcoin has seen an aggressive rejection from the major high time frame resistance of 28.4k, resulting in over $100 million in liquidations and pushing the price down to 27.3k. Will this correction develop into a high time frame downtrend, or is it nothing more than a pullback before a continuation upwards? In today's video, we're going to be reviewing the macro charts, the short-term charts, the weekly and daily charts, and of course, even discussing the next bull run. Before we get into it, smash that like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant economic events. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the third link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and of course the relevant economic data. If you're interested in trading and join our VIP group, we post trading signals with exact entries, exact targets, exact stop losses, trade justification, and everything you need to trade the signals effectively. Alongside that, you'll also get access to our trading and chart chats. So we have our trading chart education group chat over here, our general chat, our news chat, our help chat, our video chat, and of course our trade setup chat. If you're interested in joining the main VIP channel where we post our trades and of course the group chats, go ahead and contact me via the pinned comment in the free channel to find out more info. Let's go ahead guys and dive into the charts. Starting on the market data, how are we looking? 24-hour volume is down to 86 billion. This is up 64% actually in the last 24 hours. 24-hour liquidations are still very high, sitting at 113 million, up 4.4% in the last 24 hours. As you can see guys, on those liquidations, we have seen a astronomical amount of long liquidations in a very small period of time, with $88 million in longs liquidated. And in the last 4 hours alone, we are starting to see some shorts liquidate as Bitcoin bounces from that 27.3k level. Overall volatility index hasn't moved all that much. The 60-day period volatility index is slightly moving upwards as Bitcoin did see quite a large surge in price action and overall volatility in the last 48 hours. And on the 30-day period, again, we are still dropping down for a little bit of a hiccup upwards, again expecting that to move upwards over the coming days. Moving over to the DXY has been on a moon mission, pushing upwards to retest the 107 mark. Again, guys, the DXY is still within the confines of this rising channel formation. Therefore, you should expect the uptrend to continue until this uptrending support line breaks. If the uptrending support line breaks, that could provide some relief for cryptocurrency and of course for the stock market. That could result in high time frame uptrends occurring in both of those asset classes. If we see the DXY continuing upwards, we should expect a bit of weakness and of course a potential for corrections and pullbacks on these asset markets. Of course, the DXY is in a rising channel formation, which does tell us this is an exhaustion structure, meaning at some point we are expecting a breakdown of this uptrend, and if it does break down, the measured move is taking us to around about 104 to 103. Now, if the DXY does invalidate this structure and continues upwards through these resistances, we're looking at around 108, okay? We're looking around 109, so there's a range of resistance over here. If we continue through this range, this of course is going to our next resistance. We're going to be looking very, very bullish. And the stronger and more bullish DXY looks, the worse this is going to be for the asset market. It's something we do have to consider. Again, this is not saying Bitcoin is going up or down. This is just saying the overall environment is something we should be considering moving forward, because the DXY is starting to get quite high. If it does get any higher, we're looking at the DXY entering this high time frame uptrend. Of course, we do have to be informed on the relevant economic data and the upcoming economic data, because this can play a massive impact on, of course, the DXY. Main ones, of course, are going to be our unemployment data. So NFP and an unemployment rate. This is in 3 days' time. Very leading information for overall inflation. And of course, then we do have PPI coming on the 11th and inflation data itself on the 12th. All of these are going to be very, very relevant and very important in predicting what interest rates are likely to do. Are we going to see interest rates continue upwards? Will we see a hike? Will we see a pause? Will we see it just stagnate or whatever? And what impact that is going to have on the markets. Looking at the Dow Jones and the S&P 500 is still on the edge of a cliff over here, retesting a major point of support. Again, this is a completed and validated structure. We have 1, we have 2, we have 3, we have 4, we have 5 points of retest. This facilitates and actually, if you know my 5-point rule, this would actually confirm and validate my 5-point rule, and therefore this is a validated structure. We have at least 5 points of retest, 3 on one side, 2 on the other. Therefore, we have a rising channel formation. A rising channel formation is inherently a bearish structure. It has a 73% chance of breaking towards the direction of which it actually entered, meaning we have a higher chance of breaking down than we do continuing and breaking through this resistance. However, just as the DXY is in a rising channel formation, the S&P 500 is as well, and therefore we should expect the uptrend to continue until this level actually is lost. If we do lose that support level, we could see quite an ugly correction for the S&P 500, and of course if the S&P goes down, it's likely the DXY is going up, and it's likely Bitcoin will follow. So we are keeping that in the back of our minds moving forward. Looking at the Dow Jones, the Dow Jones is in a very similar position. However, it does appear that the Dow Jones has actually corrected and broken down from its respective high time frame uptrending support a little bit sooner than the S&P. So we have seen that downtrend already continue. We've seen that POC target. The next target is going to be this 33,000 target. Let's go ahead, guys, and jump into Bitcoin. So Bitcoin has seen quite a brutal 24 to 48 hours, right? I wanted to briefly interrupt today's video to discuss the 2 exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. We saw an explosive move upwards, and this move was rapid, it was sharp, it was violent, it was quick. Over $100 million in positions liquidated. Then we saw massive amounts of open interest start to build up again after Bitcoin reached these levels, meaning a lot of high leverage positions are jumping in, a lot of people are FOMOing back into the market, a lot of people are taking really aggressive shorts, a lot of people are taking really aggressive longs, and we saw a liquidity grab towards the top side, breaking just over 28.4, grabbing that top side liquidity, and then pushing the price all the way back down, liquidating both sides of the coin. So a lot of money lost, a lot of people wrecked, and the market definitely had no mercy. So what does all of this mean? Is this significant? And what are the charts actually telling us? So first and foremost, we have to understand 28 to 28.4K is a massive trigger point for the bulls, okay? If we look at the current range of price action, we have our upper range, we have our lower range, meaning a break below 24.4 to 25.2 will result in a macro downtrend. This is a macro downtrend, okay? A break over 32K will result in a macro uptrend. If we take a look at the price action over the last few months, we've been consolidating between these two high time frame levels. The 28.4, the 28.4 to 28K level, is kind of like that middle ground point, that trigger point between the midline of the lower range and the upper range. If we take a look at the prior price action, we can see that this area has acted as a resistance many times in the past, but it has also acted as a trigger point, meaning we've seen it in two instances when we break above the 28.8K level, we see 28.4K level, we see a massive surge in price action, a very volatile surge in price action that takes us up to this upper resistance. Then we saw a break down from that level. Where did it take us? It took us to the lower range of support. So we've seen the 28.4K level act as a trigger point for both an explosive move to the upper range of the current price action range and the lower range of the current price action range. Therefore, we can identify the 28.4K level as a high time frame weekly bullish trigger point. So if we get above that level, the price is very likely to continue upwards into this range. However, while we remain below this level, the most probable scenario is still a move down toward this range. However, there's a little bit more to it now since we have broken out of this weekly downtrend. We'll come back and discuss that in a moment. From a technical perspective, the 28.4 to 28K level is an area of massive technical resistance and, of course, massive significance. If we look at our technical chart over here, this is of course on the weekly chart, we have a few converging points. We have at 28K, the upper band of the bull market support band, okay? This is going to provide a degree of resistance. And of course, at 28.4K, we have the upper band of the Gaussian channel. These 2 points are again of massive significance in determining the relative strength of the price action in comparison to prior ranges. While we remain underneath the bull market support band, we have relative weakness in comparison to when the price is above. Therefore, we have overall weekly weakness. While we remain underneath the Gaussian channel upper band, again, we have relative weakness in comparison to when the price action is above. Furthermore, when we break from the top side into the Gaussian channel, that is significant as it indicates the entry into a downtrend. This is a weekly downtrend, right? So as we broke through the 28.4K level, we officially entered a weekly downtrend. Just as we talked about on the structural chart, the 28.4K level is going to be the trigger point for a shift in strength and directional move for Bitcoin. A break above that level will result in a continuation upwards, but until then, resistance is resistance until it is not. As we said in yesterday's video, everyone was getting ridiculously bullish at resistance once more. And I said, I'm not going to lie through my teeth. I'm going to tell you what the charts are saying. I'm going to be honest with everyone and tell you 28.4K is the point we need to break above for the bulls to officially take control of the charts, okay? They are gaining strength. Yes, they are looking bullish. Yes, the downtrend on the weekly has ended. Yes, we are ticking off a lot of boxes, okay? But that final hurdle is 28.4K. If we don't get above that final hurdle, it doesn't matter if we've achieved everything prior. That main hurdle is what the price needs to get above for that actually to be high time frame strength. If the price action breaks back above 28.4K, we will have officially again flipped the upper band of Gaussian channel. That will result in a continuation upwards. Again, where are we likely to go? We're likely to move up into this range. Moving over to this chart a little bit more, guys, since we have talked about the weekly chart and the significance of 28.4, we have officially broken out of this weekly downtrend. That is something we do have to consider. So as of right now, the price action is in a overall daily uptrend. We're in this overall uptrend represented by this uptrending diagonal trend line. This is our uptrending trend line. While we remain above this uptrending trend line, we are technically in a uptrend moving into resistance. So the big question is now, of what we should be looking at now, is the confliction point between this 28.4K level and of course this rising uptrend support. The directional break upwards will result in continuation upwards. A break of this diagonal trend line will result in a continuation downwards. So right now, we are in this uptrend right now. We are gaining strength. We have strength. We have faced resistance. We have failed to break above. We have seen a rejection. Now the price action is going to stabilize, consolidate, compress, find to see if it has strength to make another attempt up. Or if it doesn't, it will correct back down towards that diagonal level of support. So let's talk a little bit more about that support level. If we zoom in on the chart, we can see that support level is reflected by this channel. In fact, we have a potential rising channel formation. We have point number 1, point number 2, point number 3, point number 4. We are looking for a point number 5. Again, 2 on one side, 3 on the other side. So the likely direction for Bitcoin is going to be to come down to retest the 26.8k level once more, again testing this area of support. Now that doesn't mean Bitcoin can't see a bounce on the smaller time frame. If we break it down to the immediate time frame, we can actually see Bitcoin is attempting to gain a little bit of bullish strength here as bearish strength is starting to fade. If we draw another channel over here, we can see we have this downtrending channel, okay? Downtrending channel, which is a bullish structure. Okay, if we draw our RSI peaks in and drag it across, we can see we have actually broken out of the RSI trend line, meaning we have actually flipped momentum positive. Okay, so we have one validation point. Number 2 would be a break above this level of here. This is occurring at the midline of the rising channel formation on the higher time frame. If we are able to break above this level, a measured move of this structure could take us back to retest 28,000. So although right now, if we take a look at the directional expectation for Bitcoin, according to our structural analysis, according to our high time frame analysis, while we remain at below 28.4, we are expecting a continuation down to 26.8. However, do not be shocked if we see a bounce back to 28k, because the short-term price action is indicating right now that is a real possibility. We could see a bounce to 28k and then a correction back down towards this level. Again, guys, if we come down and touch this level, we are still in a uptrend. We are in a uptrend provided we remain above this diagonal trend line. The moment we lose that diagonal trend line, that is when the bears fully take control again on the short term and have the potential to push the price all the way back down to 25.2k. Until that happens, the possibility of a bounce either here and continuation upwards, or a retracement of 26.k and a bounce back upwards and eventual break over 20k is likely and can happen. So don't cut that off. You're overly bullish too early, okay? If you're bullish, you're good. You should have been bullish as we retested 25.2k. We've been bullish this entire time, but we haven't been overly bullish, okay? We haven't been macro bullish. We're not saying the bull market's back. We'll talk about it in a second. We're definitely not saying everything's going to go up forever. We are still challenging major areas of resistance. Now, there are some people who say, Whale, why are you bearish? Blah, 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 blah. Well, in fact, if you've been following the channel, and all the OG members would know, guys, you know, if we bring up this chart over here, they've followed our channel for a very long time, you would know, in fact, I was one of the first people, if not the first person, to flip bullish, okay? If we take a look at the calls, and all these calls can be back-checked, fact-checked on YouTube, on Telegram, we talked about these in massive details, weeks and weeks leading up to these decisions we're planning, discussing publicly on this channel. We called for a high time crash over here, but more importantly, guys, we purchased our first bit of Bitcoin at 18k. We purchased our main bag of Bitcoin at 16.5k. We've been bullish this entire time. We sold at 31.2 to 31.4k. All right, we took longs at 25.2k and we took shorts at 31.4k. Overall, guys, we have played this range perfectly. So I don't like to hear comments saying, well, you're wrong, blah, blah, blah. It doesn't matter what you think, mate. We've been perfectly accurate this entire time, okay? We're telling you again, right now, this level is resistance. There is objectively resistance there. Resistance is resistance to it, into it's not. Again, sometimes the resistance breaks, sometimes it doesn't. But when you play by the statistics, the likely probability is when we test resistance with a degree of weakness, we are likely to see a rejection. That is what we have seen. We have seen a rejection. So moving on from there, when will the bull market start? Another big question, because I'm seeing all over Twitter, the bull market's on, the bull market's back, we're in a bull run. I'm thinking to myself, do these clowns even know what a bull run is? Do they even know how to define what a bull run is? Because a bull run, in definition, is a period of time where we have a massive relative surge of buying pressure. And buying pressure is defined as increased volume, increased momentum, increased volatility. So how can we measure volume, momentum, and volatility on a macro, we can use something called a trend angle. If we take a look at the slope and steepness of a trend relative or respective to a prior trend, we can determine that the trend that has a greater trend angle obviously has more momentum, more volatility, more strength, more volume, okay? Thus a bull run if we see that over applied a high time frame. When have we seen bull runs start in the past? We've always seen a bull run within the green section. So the bull run is likely to start first and foremost from the date of the 1st of April, 2024 onwards. Secondly, we have only ever seen the bull run begin, officially resume, once we have seen a monthly candle close above our dotted trend line. What is our dotted trend line? The dotted trend line is the dead cat bounce high of the prior cycle. The dead cat bounce high of the prior cycle. Dead cat bounce high of the prior cycle. We bring this chart back up over here. Call for bull trap. This is the dead cat bounce, 48k, guys. So 48k is that respective dotted trend line. The bull run should officially start when we break above 48k. Now that isn't me telling you the price action won't go up. In fact, as we've said this entire time from the bottom, we are likely to see a 200%, maybe more, rally from the bottom until when the bull run officially starts by a technical basis, okay? It doesn't mean you should be expecting the price to go down until we reach them. Obviously, we have to go up until we reach that point. But we're talking in terms of specifics. We're going to define a bull run for what it is and not just throw out random numbers every time Bitcoin goes up a few percent. If we want to see a bull run officially start, we have to see the buying pressure reflect that on a macro scale. And how can we define that? Well, based on past price action, we have seen that massive shift in buying pressure and strength upon the breakout of the prior dead cat bounce highs. So in this instance, a bull run is likely to start officially by the official definition once 48k breaks. Of course, we're going to see a significant move upwards. We're going to see a lot of growth and a lot of green price action between here and there. But again, for that a massive bull run, that massive rally, that explosive, everything goes up, hundreds of percent kind of rally, that is when we're looking at for it to start, okay? Thanks for watching, guys. I hope you have a fantastic day. Actually, before we end up the video, really quickly, we've talked about the short term. Let's summarize everything. We talked about this range. We discussed the daily chart. We discussed the range between 32 and 24.4. We told you the significance. We also talked about 28K. We talked about how 28.4K and 28K are significant in terms of structural. And we talked about how they are important in terms of our technical. We talked about the 4-year cycle and the bull run. We discussed the short-term price action in terms of the current structural range of which the price action is moving in, which is in a rising channel formation. Of course, a rising channel formation is a bearish structure. And we talked about the 5-minute chart and the immediate short-term price action in terms of the descending channel formation and how the measured move target of a breakout of that descending channel is going to be 28k. Overall, guys, we have covered absolutely everything. If you have any questions, leave them down below, and we'll catch you in our next video, which is going to be the day after tomorrow. Thanks for watching, and I'll catch you in the next one. Cheers.